All right, Kev.
Okay, this week in trading history, what do you got
Yeah.
planned for us this week, Patrick?
This is we didn't have to go too far back in history. Like just a couple decades, right? Like it's been a while, but it's interesting to go back to July 12th of 1998, a little bit more than a week ago. Back in 1998, when Russia secured its 11 billion dollar financial aid package from the IMF in an effort to halt its financial crisis, but in the end didn't prevent the inevitable Russian ruble crisis that followed in the month ahead. And I figured, well, why not go back and go in history and talk a little about Russia? And so, what I want to do is kind of go back and do a little bit of the timeline. And so, going back to obviously, this is now many years, numerous years after the Soviet Union collapsed, right? And so, going back to April 1996. Russian officials began to negotiate to reschedule payments of foreign debt inherited from the former Soviet Union. And so they're still dealing with the fact that they had this big transition moving from the communist Soviet state to now coming in and joining the global free markets. And then they're now inherited all this debt. And so they're going into the negotiations to repay its sovereign debt was a major step towards restoring investor confidence in the country. And on the surface, in 1997, everything seemed poised to be a major turning point towards economic stability in Russia, right? And so, one of the interesting parts that almost always seems to be associated with some sort of a crisis it was the fact that they had a narrow exchange rate band, which they kept in place to keep the Russian ruble between 5 and 6 rubles to the U.S. dollar, and so it's a peg, right?
Right.
Very similar to like what you're seeing in whether Hong Kong, China, other places that peg there. But so they tried to maintain that Russian ruble in that peg. And so, what are some of the other observations? Well, when their economy collapsed, they really only had their resources as their major anchor, right? So, oil, one of Russia's largest exports, period, was selling at $23 a barrel at the time, which was a lot, which was the top end of the range. I mean, today, when we think $23 a barrel, that seems ridiculously cheap. But back then, oil was coming off of the teens, and coming up to 23 was a big percentage jump, and 45% of Russia's major main export of the was oil exports in '97. So as goes oil, goes its economy, right?
Right.
Now, a couple of things overlap this. So it was in the summer of '97 where you had the Asian currency crisis, right, in the Pacific Rim, that came in, and so there was already a lot of nervousness going around the world, and obviously Russia, kind of as an emerging market, was sort of basketed off and with this. So because of that Asian crisis, it was back in September '97. So remember, the crisis happened in '98. So we're going back in time a little bit here. So in '97, analysts September '97 analysts predicted that Russia's credit rating would improve, allowing the country to borrow less expensively. Limitations of the purchase of government securities by non-resident investors were removed, prompting huge foreign investment into Russia. And so by late 1997, almost 30% of all the GKOs, which is the short-term government bills in Russia, were accounted for by non-residents. So foreign investment was coming in, and the economic outlook appeared more optimistic, including the fact that for the first time in like the decade, that Russia actually showed positive economic growth. So these kind of green shoots were appearing in Russia at the time. But it was a few months later, in November of '97. Obviously, it was the summer when the Asian currency crisis occurred. It was in November that the first major speculative attack on the Russian ruble.
Right.
And so what was crazy was when you try to maintain a peg of a currency, you have to defend it. And so what do you need? You need foreign exchange reserves, right?
Right.
And so what happened was
You run out of those eventually, though.
exactly. And so in the first speculative attack, the central bank of Russia burned close to $6 billion in foreign exchange reserves to defend its currency to maintain the peg. And that was back when $6 billion actually meant something. It was a lot of money back then. Today that's just a rounding error. But back then that was a strong.
One day is QE.
Yeah, absolutely.
I'm just kidding. Actually, it's more than one day, but it's 1 month. But anyways, go on.
Anyway, so then another blow was dealt to the Russian economy in December '97, when guess what? Oil prices started to turn, right? And so a lot of that that outlook, a positive outlook for Russia, was about the fact that oil was such a huge export for them. And so just to kind of go back and show a chart right over here, this is oil prices in 96, 97, and then 98. And so you can see it was trading more or less in the mid to low 20s.
Look,
and then
how quaint is that? Like $26, and it went down to 12.
That's the whole point.
It's hilarious, isn't it? Funny that it wasn't that long ago that oil was trading at those kind of numbers.
Yeah, and think about it: a drop from $26 down to 11 is like a 60% wipeout. If I need, like it.
That's some good math, buddy. That's really quick on the fly. I like it.
I was guessing. Was that somewhat accurate? I hope so. Anyway, but the point is that that's a pretty big move, right?
Oh, it's a huge move. It's a collapse. It's like
and when you're emerging from the former Soviet Union, and 45% of your entire export market is energy, that this is a massive blow. And you just blew a huge amount of your foreign exchange reserves defending the currency. And then suddenly you get kiboshed by oil collapsing, right? And so this led to a series of really interesting things. So in February of 1998, so now we're going into the 1998 year, suddenly all the government risk and expectation stuff started to come in, with many uncertainties now suddenly coming into the Russian economy as investors turn their attention to now what could be Russian default risk, now that a whole bunch of foreign investors came in and invested into what they thought were green shoots in Russia. And suddenly now, what's going on here? But then it becomes political. In late of March of 1998, the economic situation started becoming dire. And on March 23rd, President Yeltsin, the one in that picture, abruptly fired his entire government, including the prime minister.
Yeah. So you know what? He liked the sauce even more than us.
Yes.
And he, like, there's lots of Google Yeltsin drunk. There's a lot. He's worse than the guy in the drunk car. Like, what's his name? The EU guy. I'm not sure. That guy also likes his sauce, but he likes his sauce. So I'm thinking that was done.
That's
on
that's embedded in the European culture, though, dude. That's actually par for the course over there. But the point, though, like, can you imagine? It's the equivalent of Trump saying, "No, I don't like the way the Congress is going. I'm just going to fire them all, and let's just put in a brand new Congress."
You say that like it's like something that's outside the realm of possibility.
I don't like who's in the Congress. You're fired.
You're fired.
So
he's going to make a new reality TV show. Anyways, go on. Sorry, I didn't mean to interrupt.
No. But it's funny. But like, think of the confidence when you say, "Well, I just invested in Russia, and they just completely fired their entire government." Right. And so they're going on. Then early May, in a routine update, the chief chair central banker in the Central Bank of Russia, this Sergei Dubinin, warned the government ministers of a debt crisis within the next 3 years. Unfortunately, he forgot to mention that. Didn't realize that there was a whole bunch of reporters in the audience.
That's almost as bad. Whoa, I got to tell one quick story. A side note here. That's almost as bad as when the Prime Minister of Japan, I don't know if I've got this right, when there was that terrible, nuclear, what's the tidal wave, the tsunami, and then there was the nuclear disaster, and he was trying to get everyone convinced, like he was trying to reassure the public there was nothing was wrong. And he held a press conference, and instead of showing up in a suit, he showed up in a hazmat outfit. And I'm like, dude, like you're trying to tell everything that's under control. Do not show up in a hazmat outfit. And I was like, I remember because I was long and I was like, oh my God. And then I was like, it immediately went offered and it was lock limit down after they saw, traders saw him show up with the hazmat outfit. Okay, anyways, back to Yeltsin firing everybody.
No, but that's funny. Anyway. All right, so it gets even better. So investors' perception of Russia's economic stability continued to decline because, the IMF and was coming in to try to work out something, some form of aid, right? But part of the international committees that were coming into Russia to kind of talk about everything was our good buddy Larry Summers, right?
Old Larry.
And so he, at the time, was one of America's top international finance officials. But he went and he was denied a meeting with the Russian prime minister while in Russia because an inexperienced aide determined that Summers' title of Deputy Secretary of the Treasury was unworthy of the prime minister's audience. And so the two never met. So here you have a chance to fucking show some stability with Larry Summers, who at the time was like the deputy secretary, coming in there to kind of show some stability. The Russian PM wouldn't meet with him.
My goodness.
Because he's unworthy of his status. And so at the same time, the IMF left Russia unable to reach an agreement with policymakers on an austerity plan. And then just keeps going from there. So liquidity, monetary policy, and fiscal policy just kept escalating as in May 18th, the government bonds swelled to a 47% yield with inflation running at 10%.
Don't worry, everything's okay.
Everything's okay.
Everything's okay. 47%.
Oh, dude, it gets better.
I'm good.
It gets better than this. All right. So then the Central Bank of Russia responds by increasing the lending rate to the banks from 30% to 50%, and in 2 days used $1 billion of Russia's low reserves to defend the ruble. So then they're using up the last of their reserves to defend this peg. Meanwhile, like we were showing on that chart, oil prices just keep dropping, right?
Right.
And they dropped to $11 a barrel, which is less than half of their price level earlier in the year. So the oil and gas oligarchs were advocating devaluation of the ruble, which would increase the ruble value of their exports. And in light of this, the Central Bank of Russia increased the lending rate again. But get this. So the Central Bank of Russia increased their lending rate to 150%.
Yeah, but it's just overnight.
Still, it's 150%. Yeah. So
it's not good. Like, it's tough for your economy to function when you got 150%.
Right? And so the Central Bank of Russia chairman there, that Dubinin, responded by stating, I love this. When you hear talk, I'm not going to try this accent. When you hear talk of devaluation, spit in the eye of whoever is talking about it.
That's always a good plan. Like, that's how to fix the problems by
just spit in their eyes. So
just spit in their eye.
Screw these oligarchs who want devaluation. So then it comes July 12th of 1998, which is this date in history where the IMF comes in, provides additional assistance of $11 billion, which $4.8 billion was distributed immediately, replenishing the coffers of Russia. Yet between May and August, approximately 4 billion had left Russian capital flight. With all of the revenue sagging because of oil prices and the liquidity, the IMF assistance did not provide much relief at all. It was just barely enough to just keep them afloat. And then a month later, on August 13th of 1998, the Russian stock and bond and currency markets collapsed, right? And that was
It shit the bed. It shit the bed. There's no other way to describe it.
So here's my favorite way to look at a currency thing, because most people look at it the U.S. dollar or ruble, but I insist on always putting the main currency against the dollar. But you can see the collapse from 16 cents to about 4 cents, about a 75% wipeout of its currency in literally days.
Yeah,
right?
just brutal.
It was 75% just like that, boom, overnight, just like, so when you hear like Kyle Bass talking about like eventually what China would have to do with a deval, like this is that's chump change compared in percentages anyway, not in aggregate size, but in terms
that's
of
still
percentage.
too bullish compared to what Kyle Bass thinks that China's going to have to do.
Anyway, but it was a complete collapse. And so it led to the government to have to default on its domestic debt in its entirety, or both. So there's your domestic debt default that so many people talk about when dealing with the global debt we see today, as to whether that's even on the table. But the annual yields in the ruble-denominated bonds were more than 200%.
Yeah. Wow.
The stock market had closed.
It didn't function anymore.
No.
It's just like
no.
You can't look at that point.
It was pennies
like,
on the dollar, right?
Yeah,
and the stock market had been closed for 35 minutes, like, because they had to close it because it went limit down, I guess, for their thing. They had to shut it down. It was down 65% when it opened the next day.
Well, do you know who was one of the biggest investors in Russian bonds, and kind of was the
who?
Long-term capital management.
Really?
Yeah.
Great investment.
Yeah, they were. That was one of the original positions that kind of started the whole 1998 long-term capital crisis. Kind of crisis was caused by this initial default on the Russian ruble. So they lost $430 million on Russia.
Wow.
It wasn't actually that much when you go look at the other how much they lost and other stuff. They lost,
but it contributed to the whole thing, right?
It was the start of it, and I remember that summer very well because I was a young whippersnapper trading on an institutional desk, and the liquidity disappeared. And I remember being trading and stuff just going no bid, and I remember guys chasing gamma, and I was short gamma too, and there's like points where there was just nobody to sell to. There was just nothing. There was no bids. It was a summer situation. There was no liquidity. And I remember at one point we just turned off our computers and said, listen, either the world, no, honestly, you think that's a joke, but it was like, we were like short all this gamma, and it was like, okay, either the world's going to end and then it's going to not matter, or it's going to bounce. But like, it's just cause it just went no bid. It was dumb to sell because there was nobody to sell to. There was just no bids at all. Right. Guys would come ask me for a bid. I would buy baskets like below the bid, like a percent under the bid. I would go to put them up and I would sell them. I would sell like 25% of my position or something. Then I'd be long 3/4 of it still. And not only that, all of a sudden the market would move more. So therefore I would be getting longer because of my gamma. And then the same guy who just pitched me all these baskets would phone me up kind of 20 minutes later and say, I got to sell more. And it just ended up being just stupidity. It was just, in hindsight, it was just compared to 2008, it wasn't that big a deal, but it was pretty crazy at the time. So I do. But
what I think a lot of people don't appreciate. I mean, our listeners are a smart bunch, and many of them have been through a lot of these things. But most people don't appreciate how liquidity can disappear.
It's a coward.
It's a coward. When you need it, it's never there.
Gone. For sure.
And there's a lot of people that always warn about this in the junk bond markets and stuff like that. Like when shit hits the fan, that there isn't going to be the liquidity that a lot of people are going to be looking for in this kind of stuff. Anyway, but let's just go back to the story because I just want to wrap this up. So in the end, the stock market wiped out 75% in Russia, 39% alone in the month in 1 month. Right, and Russian officials were left with little to no choice, so they floated their exchange rate. It wipes out to the downside. So they defaulted on all their domestic debt, halted payment on all ruble-denominated debt internationally, and declared a 90-day, moratorium on payments by commercial banks to foreign creditors, and they basically seized it up, and that was the Russian ruble crisis.
And you know what's interesting? I'll just leave you with one thought. It was actually interesting because they did default on Russian ruble-denominated debt, which a lot of the kind of more MMT-like guys like me will tell you that you can never do, because the reality is that you can always print more, and they actually did default on their own currency.
Right. And
Yeah.
that's, there you go. That's food for
Great
thought.
story, Patrick. Thanks for
Yeah.
sharing that with us.
All right. So.